Hello, insurance enthusiasts. Tonight we're diving into the fascinating yet often confusing world of risk retention groups, or RRGs. In the simplest terms, an RRG is like a group of businesses coming together to form their own insurance company. They do this to get coverage for similar risks that they all face. Think of it as a self-help group, but for insurance. RRGs are regulated under federal law, but they're licensed in at least one state. They provide coverage for their members, who are also the owners. This ownership structure allows RRGs to have more control over their insurance costs and coverage options. They don't have to rely on traditional insurance companies, which can sometimes be expensive and inflexible. RRGs are particularly popular among businesses in high-risk industries. These industries often struggle to find affordable coverage in the traditional market. By forming an RRG, they can pool their resources and spread the risk among themselves. This can lead to lower premiums and better coverage tailored to their specific needs. More on that after a word from our sponsors. Now let's talk about risk purchasing groups, or RPGs. They sound similar to RRGs, and they do share some similarities, but there are key differences. Like RRGs, RPGs involve a group of businesses coming together to purchase insurance. However, RPGs don't form their own insurance company. Instead, RPGs leverage their collective bargaining power to negotiate better rates and terms with existing insurance companies. Think of it like a bulk discount at Costco, but for insurance premiums. RPGs are typically formed by businesses in the same industry or with similar risk profiles. The main difference between RRGs and RPGs lies in their structure and how they obtain insurance. RRGs are self-insured entities, while RPGs purchase insurance from traditional insurers. Both offer businesses a way to potentially lower their insurance costs and gain more control over their coverage, but they go about it in different ways. Next up, we have captive insurers. These are insurance companies that are established and owned by a parent company or group of companies. Think of it like having your own personal insurance company, but instead of insuring your house or car, it insures the risks of your business. The main purpose of a captive insurer is to provide insurance coverage for its parent company. This can include a wide range of risks such as property damage, liability claims, and even employee benefits. By forming a captive, companies can often obtain insurance at a lower cost than they would in the traditional market. Captive insurers also offer several other advantages. They provide greater flexibility in designing insurance programs tailored to the specific needs of the parent company. They can also provide access to reinsurance markets, which can further reduce the parent company's overall risk. Captives are a complex topic, but understanding the basics can shed light on another corner of the insurance world. Now let's move on to industrial insurers. These are insurance companies that specialize in selling small face amount policies, typically life insurance policies, to individuals and families. These policies are often sold door-to-door by insurance agents who collect premiums on a weekly or monthly basis. Industrial insurance policies are designed to provide basic life insurance coverage to working-class families who may not have access to traditional life insurance products. The premiums are typically very affordable and the death benefit is relatively small, often just enough to cover funeral expenses and other final costs. While industrial insurance may seem like a relic of the past, it still plays an important role in providing financial protection to millions of people. It offers a safety net for families who may not otherwise have one. And it ensures that even those with limited financial means can have some level of life insurance coverage. Section 5. Service providers navigating healthcare. Let's switch gears and talk about service providers in the healthcare industry. These are individuals or organizations that provide medical services to patients. They include doctors, nurses, hospitals, clinics, and a whole host of other healthcare professionals and facilities. Service providers play a crucial role in the healthcare system. They're on the front lines, delivering care to patients and helping them manage their health. They also work behind the scenes, conducting research, developing new treatments, and educating the next generation of healthcare professionals. Service providers interact with various types of insurance plans, including HMOs and PPOs, which we'll discuss in more detail later. Understanding the role of service providers is essential for navigating the complex world of healthcare. Section 6, HMOs, emphasizing preventive care. Now, let's dive into the world of health maintenance organizations, or HMOs. These are health insurance plans that focus on providing comprehensive healthcare services to their members through a network of contracted providers. HMOs emphasize preventive care and early intervention with the goal of keeping their members healthy and reducing the need for costly medical treatments down the line. When you join an HMO, you typically select a primary care physician from the plan's network. Your primary care physician acts as your gatekeeper, coordinating your care and referring you to specialists within the network when needed. HMOs typically have lower monthly premiums than other types of health insurance plans, but they also come with more restrictions. For example, HMOs usually require you to stay within their network of providers to receive coverage. If you go outside the network, you may be responsible for the full cost of your care. Despite these restrictions, HMOs can be a good option for individuals and families looking for affordable, comprehensive healthcare coverage. Section 7, PPOs, flexibility and choice. Let's talk about preferred provider organizations, or PPOs. Like HMOs, PPOs are health insurance plans that contract with a network of providers to offer discounted services to their members. However, PPOs offer more flexibility and choice than HMOs. With a PPO, you don't need to select a primary care physician, and you can see any doctor or specialist within the plan's network without a referral. You also have the option to go outside the network for care, though you'll typically pay a higher portion of the cost. PPOs generally have higher monthly premiums than HMOs, but they offer greater flexibility and access to a wider range of providers. Choosing between an HMO and a PPO depends on your individual needs and preferences. If you're looking for the most affordable option and don't mind staying within a network, an HMO may be a good fit. If you value flexibility and choice and are willing to pay more for it, a PPO might be a better option. Section 8. The interplay of insurance entities. As we've seen, the world of insurance is a complex web of different entities, each with its own unique structure and purpose. RRGs, RPGs, captive insurers, industrial insurers, service providers, HMOs and PPOs all play a role in providing individuals and businesses with financial protection against a wide range of risks. Understanding the differences between these entities is essential for making informed decisions about your insurance needs. Whether you're a business owner looking for the best way to manage your company's risks or an individual trying to navigate the complexities of the healthcare system, having a basic understanding of these insurance concepts can help you make the best choices for your situation. It's also important to remember that the insurance landscape is constantly evolving. New products and services are emerging all the time, and existing ones are being adapted to meet the changing needs of consumers and businesses. Staying informed about these changes can help you stay ahead of the curve and make the most of your insurance coverage. Section 9, Conclusion, a multifaceted insurance landscape. In conclusion, the world of insurance is a multifaceted landscape with a variety of players, each serving a specific purpose. From RRGs and RPGs to captive insurers and industrial insurers, these entities offer businesses and individuals different ways to manage risk and protect their financial well-being. Similarly, service providers, HMOs and PPOs play crucial roles in the healthcare system, delivering care, managing costs, and providing individuals with access to essential medical services. Understanding the nuances of each entity empowers consumers and businesses to make informed decisions about their insurance and healthcare needs. As with any complex system, staying informed is key to navigating the ever-changing world of insurance. By understanding the roles and functions of these various entities, we can make more informed decisions that ultimately benefit our financial health and well-being. And that's our show for tonight.